So the volatility actually creates a really strong call rate. I mean, it tracks the hot money and the traders, and that's what creates the options market. And without the volatility, you can't sell a convertible bond. In order to sell a convertible bond, you need a volatility of more than 45. The S&P is 15. So if you're holding the S&P index or real estate or gold or bonds, you can't sell convertible bonds. But if you're holding Bitcoin, which is 60 vol, or if you lever Bitcoin, and we lever the Bitcoin to get to 120 vol, we can rinse or repeat that trade. We can, in essence, issue $1 billion in convertible bonds, buy Bitcoin, wait a month, do it again, wait a month, do it again, wait a month, do it again. So we're the most prolific issuer of convertible bonds in the world because we're the ones that have the best use of proceeds.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Michael Saylor reveals his bold strategy for Bitcoin's journey to $100,000 and its place on MicroStrategy's balance sheet. Let's catch him up to uncover insights and potential risks.
What do you want? You want the thing you invest in to go up faster than the S&P index. And you want it to stay volatile, more volatile than the S&P index. And there's only one commodity in the history of the world that checks both of those boxes, and that's Bitcoin. And if you were risk adverse and if you diversified it, if you basically had half Bitcoin, half real estate, or half Bitcoin and a bunch of bonds or whatever, the volatility dies and the performance dies, the fire goes out, and you can't keep raising capital. So MicroStrategy has gone 100% Bitcoin, and we're pursuing all those various capital markets. And there's just large pools of investors that they need to buy. The people that trade equity want equity. The people that trade options need the options, and the people that trade the convertible bonds need the bonds. And they can't buy Bitcoin. They don't want Bitcoin. They really want the other instruments. And so we provide them that security they need. Like if I start a fire and you put the fire in a stove and you cooked food, it wasn't a loophole in the laws of thermodynamics. There's energy in the fire. If I take a 40-ton weight and I put it in your backyard, it's sculpture. But if I spin it at 60 RPM as a turbine, it's not a loophole that you're spinning 40 tons at 60 RPM. It's a turbine.
So you engineered it. I mean, it's a well-engineered,
right? Think about a dam. You got a trillion gallons of water sitting in a mountain lake, and you build a dam and you put a turbine in it, and then you have a 60-foot head. You drop the water 60 feet, and you put 1 billion gallons through the turbine. It's not a loophole. There is potential energy that converts to kinetic energy that becomes electrical energy that lights up the city. So with Bitcoin, you have energy in the volatility. You have energy in the performance. A 60 ARR, 60 vol asset has an enormous amount of energy. It's like a train moving 60 miles an hour with a 40-ton weight that's spinning at 60 RPM on the back. And some normie in US dollar world is in flatland, and he's on foot, standing on a flat earth, and he's got a 40-ton rock behind him. And he's like, well, my 40-ton rock doesn't do that. And I'm like, well, that's because I'm on a train and mine is a flywheel and it's spinning 60 RPM. And so if you can't imagine or understand it, that you think, well, we both have 40-ton weights, right? But mine's moving and mine's spinning and yours is sitting. So no, it's not a loophole. It's physics. And in this case, it's financial physics. It's just to be charitable to the people that are staring at it. They've never seen an asset like Bitcoin that is 60 vol and 60 ARR, 60 velocity through US dollar space. And because they've never seen it, they think it'll stop. It's like, if a white dwarf, spins through your atmosphere and it sucks all the atmosphere off of your planet, you're like, well, I never seen that before. It shouldn't be doing that. And it's a loophole. It's not. It's basically physics. You just don't understand the physics because maybe you just haven't spent enough time to study it, or you don't have the intellectual capability or the math to describe it.
Bitcoin has captured investor attention with its meteoric rise, boasting a 1,200% gain over the past 5 years and a staggering 127% rally in 2024 alone, breaking the $100,000 barrier. Despite its allure as a high-performing asset, Bitcoin comes with significant risks that investors must carefully consider before buying. One of the primary risks is government intervention. As a decentralized digital currency that challenges traditional financial systems, Bitcoin poses a threat to central banks and fiat currencies worldwide. Governments may respond by imposing restrictions or outright bans on Bitcoin ownership and mining. While the current political climate in the U.S. hints at favorable regulations, global uncertainty around legal frameworks remains a significant concern. Another potential challenge is the technical complexity of upgrades to Bitcoin's network. Although Bitcoin's design is simple compared to other cryptocurrencies, updates for scalability or privacy could inadvertently introduce vulnerabilities. A mishap in the network's integrity could undermine confidence and trigger a sharp price decline. Emerging quantum computing technology also presents a looming risk. These advanced machines could theoretically break Bitcoin's cryptographic security, exposing private keys and undermining the entire system. While developers are working to fortify Bitcoin against such threats, this scenario remains a critical concern. Bitcoin's scalability is another issue. With its blockchain currently processing only about 6 transactions per second, far below Visa's capacity, its use as a payment method is limited. Solutions like the Lightning Network aim to address this, but failure to scale effectively could restrict Bitcoin to being a mere store of value. Finally, Bitcoin's notorious volatility challenges its adoption as a stable financial asset. Although it has generated immense wealth, its dramatic price swings, sometimes exceeding 50% drawdowns, deter many investors. Whether Bitcoin can stabilize as it matures will determine its long-term viability as a global financial asset.
Look, I don't have a crystal ball. You're asking me to predict the future. Okay, so when we announced this on October 30th, we didn't know that we would have a very enthusiastic embrace by the capital markets. We didn't know who was going to win the election. We didn't know what Jerome Powell was going to say a few weeks after the election. We didn't know that David Sachs was going to be the crypto czar. I mean, there's a lot of things we didn't know when we announced it. So that was a few weeks ago, and we laid out what I viewed was a conservative plan. My view is you should always underpromise and overdeliver. This probably won't come as a surprise, right? So you lay out a plan. I was reasonably confident that we would be able to do this in less than 3 years when we announced it October 30th. But, I literally didn't know what would happen in the next 4 weeks. So the answer to the question is we go as expeditiously as the capital markets will allow. And when the political winds blow in our favor, and when the capital markets winds blow in our favor, we put up the sail, we go fast.
Eliminating the capital gains tax on Bitcoin presents an opportunity for the United States to embrace the future of digital finance and empower its citizens. As Bitcoin continues to establish itself as a cornerstone of the global monetary system, the tax burden on every transaction acts as a significant deterrent to its everyday use. Removing these taxes would signal the U.S. commitment to fostering innovation, enhancing financial freedom, and ensuring its leadership in the digital economy. Bitcoin's decentralized nature and finite supply make it a hedge against inflation and an alternative store of value, but taxing every gain discourages both investment and adoption. Americans using Bitcoin for small transactions, like buying coffee, find themselves taxed for what should be seamless exchanges. This complexity stifles the potential for Bitcoin to serve as a mainstream medium of exchange and undermines its role in creating a more inclusive financial system. Globally, nations such as Switzerland and El Salvador have embraced tax exemptions for cryptocurrency, spurring innovation and economic growth. If the U.S. follows suit, it could not only stimulate domestic adoption, but also attract businesses and entrepreneurs seeking a supportive regulatory environment. Such a move would establish the United States as a Bitcoin superpower, benefiting its citizens and reinforcing its economic dominance. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.